So my plan today is really to talk to you about our accounting processes, some of the systems we use, and also go a little bit into financial statement review and compliance with taxes and audits. So feel free to ask questions, but I will just kind of try to move this right along. Great, next slide. So key services, we offer 2 levels of service. So we offer an Exhibit A basic service, which many of you have. It's the accounting and administrative service. I take great pride in the financial and accounting services that we offer personally as a CPA with almost 20 years of real estate and industry experience, but also just my own personal integrity. I mean, you guys are entrusting us with handling, you know, in a lot of cases, hundreds of thousands and sometimes millions of dollars. So I want you to feel that, you know, ACM is a company you can trust. We have lots of systems in place that segregates duties. None of our check signers have access to the accounting. They're not the same people who reconcile your bank accounts. So be sure to ask those questions. Hopefully you'll never be bidding out your management services. But those are important things to know. You know, what are the internal controls that the company has in place? And those are processes that we go through annually with the auditors as well. So our basic service covers all of that. It covers basically giving you the homeowner and board portal, banking, financial reporting, payment of invoices, collections, community administrative services, all of your unit owner correspondence, audit support, record keeping, and basically we assign you with a Chris Carden, which is a contract administrator / assistant manager. All of our clients get that service. Everything that I just went over, each of you received that. If you've opted in for Exhibit B, which is our full management service, you also get assigned a portfolio manager who reports to the team lead and to Gisela, and that includes all of your, you know, your guidance, working directly with the board, annual budget meeting attendance, facilitating action items, conducting common area inspections, insurance claim administration, preparation of your annual budget, after hours emergency service, architecture compliance, covenants enforcement, procurement, so getting bids, and oversight of community contracts and on-site staff, if that applies. So those are basically, that's the breakdown of our services. And in our management agreement, we have essentially a couple of deadlines that we push every month with our staff. And this is in addition to just keeping you informed, as Gisela talked about, being in communication with you all. But of course, you can expect a management report no later than the 25th of the month. And what we're actually working on is doing a better job of accommodating your board meeting dates. So if you request your management agreement, we can definitely provide you with financials and then, you know, updates for your meetings. You should be getting that. So again, if you're not receiving those things, please let us know. We also have a lot of add-on services. So Bernard talked about the maintenance and facility management support. We do offer recurring contracted services now. So there are things that we've never bidded on before, but we have the ability with this new added support and expertise that we can offer. Project support, additional inspections. He talked about that, as well as additional collection services such as the debt letter. These things are we're always looking to add value to you all. It's not about charging extra fees, but we want to add value. We want to look at what your needs are as a community and meet those needs. So the next slide, I'm going to talk about. Yeah, sure.
I know in the past we've used people from ACM to help facilitate our elections.
Mm-hmm.
I don't see that on the list anymore.
Well, that's meetings, basically. That's your annual meeting. Is that what you're referring to?
Yeah.
Yes, so that would be covered under that, under your full service package. This is really just, I should have said, including but not limited to. Obviously, defer to your management agreement. Did I answer your question?
Yes.
Great. All right, so accounting system process. What do we do here? How does all the magic happen in the background? It's actually pretty intricate. ACM was actually one of the first management companies in Maryland to adopt integrated systems. When I joined ACM in 2009, we were pretty much still paper. We used a system back then called DocStar, where they physically uploaded PDFs. And the owner at the time, Mr. Hertzberger, the founder, he said, look, I'm not a paper person. We really need to move into the 21st century. So at the time, we were using a system called GenArc for our accounting platform. And they introduced us to some third-party integrations. So we introduced at that time, and some of you probably remember, Synerthco. That was one of the first systems we used to really bring you portals, and we used our web platform called Resident Interactive. I don't know why that stuff stays in the back of my brain, but we've used different services over the years to try to enhance your experience. ACM uses a centralized management accounting system called eUnify today. So over the last, I guess you could say, 13 years, we've really grown and enhanced so that our staff aren't working in various systems. We everything from the front end to what you see on the portals to the back end, our accounting services, our work orders, resident requests, architectural requests, all of that flows through the same system. So that's why we're able to deliver you with a portal that's all inclusive. Via this integrated system, we're basically able to give our board members and our staff with a single sign-on to support your community. So how does that all work? So eUnify integrates with a platform called Strongroom, and that's where you would approve your community invoices. And then CITBank is the bank system for the operating. And I have to emphasize this, and it's in our agreement. We do not select your reserve bank. We can help you. We can point you to advisory services. We're not financial advisors. CITBank actually does have a reserve desk, but by no means does ACM control where your reserves are. And I think that goes back to the point of controls. It is the board's decision if your signer's on a reserve or not. We can provide an administrative signer for the purpose of getting your bank statements and reconciliations, but it's very important that I note that. We're not here to take over your money. In terms of the operating account, we do ask that we control that because we have to collect all of your assessments, we have to pay out your invoices, we have to monitor that account daily. And I'll introduce you guys to our wonderful AP manager in a moment. But we have to use that process daily. So, but it's also your decision how much money you keep in that account. You could say, well, we just want 2 to 3 months of assessments and then we want to sweep everything else. So that's something that if you want to discuss with us, let us know, and we can certainly work through that. And we must emphasize, we don't want you to ever exceed the FDIC limit in any account per bank. So it's $250K per bank per tax ID. And we can assist you with that and if you're in that situation, that's something we've monitored and we've been in touch with you. I had a question, yes.
Yeah, you say you do not reserve the bank. Whose responsibility is that?
So so basically, the bank that your replacement reserve funds are in, you can select. So we can place them in CIT, but you can say no. We really want to use, this other bank. I mean, it's easier for us administratively, but it is still up to the board. Just like picking your attorney and picking your auditor, those things are, definitely at the ability of the board to select. So I just wanted to point that out, if there was ever any question about that. Hope I answered your question.
Yeah, thank you.
So the last thing on this slide is just to talk about data recovery and business continuity. So again, my job here is to make sure you're protected. Your funds are protected, your data is protected, you're getting good service. So one of the things that I'm always checking on is, if something were to happen, of course, there's always, with technology, there's always potential for, outages, national disasters. So I ask our third-party vendors this question: what is your plan in the event of, a data, outage? So this is the answer. Basically, for the eUnify platform, data is stored in the AWS Cloud. So for those who are not familiar, it's the Amazon Web Services. Multiple layers of backups are available for data recovery. Server images are taken nightly, and files are also backed up to a third-party cloud provider. So this is called redundancy. So we have multiple copies of your data. So if there's ever any question about, what happens if ACM systems go down. And again, you own your data, you own your bank accounts. Everything is in the association's tax ID and name. So I just wanted to point that out.
Theresa?
Yes.
Cybersecurity, how is that differentiated between ACM and their clients?
So I'm not an IT specialist. I will say that what we're concerned about is the fact that everything is cloud storage, right? So we have multiple authenticity in terms of verification of logins with our staff. We frequently ask them to change passwords, but there's no so we don't commingle funds, and in terms of, accessing the database, it's all access control. So if I only want Joanne to have access to this community, that's all she's gonna have access to. So obviously, most of our staff have access across our communities, but again, we do our best to try to, stay on the cutting edge as it relates to that.
What kind of cybersecurity coverage does ACM
Oh,
have?
coverage? Yes, we do have insurance coverage on cybersecurity. I can't tell you the amount off the top of my head, but we do have that policy in place.
So it's a significant concern.
Not for me. I mean, it's a concern for companies who don't have it, because anytime you're using ACH, which is, any kind of electronic transactions, it's so important to have cyber insurance. Absolutely. And I'm not sure that everyone's privy to that. But yes, we do have that coverage as a company. Yeah.
Going back to having the financial reports available to the board members monthly, you sounded like there was some flexibility in that, and I didn't quite get it.
I was stating that our contract says the 25th. So that's the drop dead date that we have to provide you with the management report, which includes your financials. We are making every effort to provide you with those reports by your board meeting date, to just make sure that if that's something that you want. In the past, if your meeting's in the first week of the month, it may be a little difficult, so we would ask you to utilize the prior month. But if your meeting, I would say, is anytime after the 10th of the month, there's no reason we can't provide you with your financials for your meeting.
We can't speak more highly of Jonathan.
Thank you. Thank you so much for that. Our staff really works so hard. I'll be sure to let Jonathan know.
He must be one of your crown jewels.
He is. He is. And thank you. We appreciate the feedback. We really, really do. One of my goals here is to have the best and brightest in this company. It's not an easy task. It's really not. And, for those who've been impacted by, turnover, it happens everywhere. But it is my job and my goal to try to retain the best people, to compensate them well, to reward them, to thank them as much as possible. Because it's not an easy industry. It's a lot that happens in the background. So I really appreciate you guys acknowledging that effort. All right. So I'm going to talk a little bit about the payment processing. I won't spend a lot of time on it, because hopefully the I don't know if it's a flow chart, but the diagram is clear. So we receive payments from multiple directions, and all of this happens daily. And we process payments daily, and we make payments out daily. So, we're not a company that really ever stops. I mean, there's, so payments are coming in through the portal from homeowners. So this is the receivable side, if you will. So payments are coming in through the ACM.com, the ACMHome.com portal, and that's called CIT Property Pay. Most of you should be familiar with that. Payments are also still mailed to a lockbox, which is the PO box, and many homeowners still utilize that as well. And the other method is payments are processed via online bill pay, and that's when the homeowner goes into their own bank and they set up and this is something I want to say. It doesn't mean that it's electronic. A lot of banks are still mailing checks. So just because you're setting it up on your computer, that doesn't necessarily mean that ACM or CIT gets it immediately. So I just want to caution that. And then all of those payment methods that come in daily get sent through CITBank, and it comes into a file, the import file, electronically into our accounting system, and that's posted to homeowners' accounts daily. Now that doesn't mean if you mail it today, we're going to get it today or tomorrow. It just means upon receipt, then it gets compiled into a file that comes in. So we're able to do sort of a daily reconciliation, and I'm thrilled about that. Because, in the old days, we had to do manual reconciliations, and, the sooner you catch any kind of cash thing or misposting or a homeowner picked the wrong account, the sooner the better. And our system is, we do have what's called account validation. So you can only pay to your account. However, we do have situations where there's a master sub and someone just pays the master fee to the sub association or the sub to the master. We can't control that. So if you send the wrong amount into, the wrong, so those in those situations you may see times where we have to transfer, but we really try not to have to do that. We never commingle associations funds. This is a compiled file, but it's all controlled by an association ID that is specific and a homeowner ID that is homeowner specific. Next slide. Any questions about that process? at all.
Quick question, there doesn't seem to be a way to tell whether the payments came in by the CIT property pay or by mail or by online banking.
We can see that in the back end, so if there's ever a question, then we can answer that. But yeah, you wouldn't see that on your side. We're just concerned about getting them posted to the ledgers.
So the piggy bank on that, say, if you click the process button, you'll capture it before you get the funds?
I'm not sure I'm clear.
Like if you're processing a payment and you click, do you wait for it to come through the bank? You see?
You mean if you're the homeowner?
Yeah.
So yeah, once you see it clear your bank, then usually within ACH is usually 24 to 48 hours. So once you see it leave your bank, we should have it within 24 to 48 hours from the time that it directs your account. Yeah, that's the standard. The automated clearinghouse standard is 24 to 48 hours. Wires the only, we don't do wires, and we don't do wires for internal control. None of my staff have access to wiring out or receiving in money. So, and again, we don't even take, years ago again, we looked at our accounting processes and I said, I don't even want my staff handling cash. We don't accept cash. We really don't like to accept checks either. Now, we do have a drop box, but it goes straight to the bank. We really want to not be a part of that process.
I got a comment about CIT. I mean, I was not happy when you guys switched,
Mm-hmm.
just because now
Yeah.
I have to go in every year and change
Yeah.
the dollar amount. Do you guys send notices to homeowners to remind them?
Yes.
I'm looking at the delinquency and I just see
Yes, they
new
should be.
dollar amount. I didn't know about that.
Yes, I actually confirmed that with CIT. They can actually opt in for it to automatically change because they get a file from our system that tells them what the assessment amount, but the homeowner has to control that. So we can't automatically change it. Obviously, it's their bank account. But yes, CIT does send notifications, as did Union Bank. They would send. Unfortunately, people do have to take the initiative to go in and change it if they're
The old system, they automatically did it. And I
Well,
looked at it.
sort of. So it depends. If it was through, so in the old system, we had two services. We did in-house direct debit, where our staff received the bank account information, entered it in, and then the other side, so that automatically changed. But then the side where the bank processed it was the same. The homeowner had to go back in and change it. The reason we got away from that was just at the recommendation of our insurance provider and of our systems program. Our director of eUnify actually said, we probably shouldn't be, and it's risk for us. Obviously, it's a management company. I trust my staff, but people are people, and I'd rather not put bank account information in their hands. Just, let's send it to the bank. The bank is insured. The bank has to pass annual audits. They have to, have certain processes in place for handling confidential information. So we just decided as a company, and I know that it was a tough transition. And again, I thank everyone who worked with us through that. We had not changed banks in 10 years. So I changed the bank initially in 2009 when I started here from, I think it was BB&T, who had none of this, by the way. Everything was manual. To go to, at the time it was Smart Street, and then Union Bank, same bank, and then we decided 10 years later they're really not keeping up with the technology, and we needed to change. There's two major things I have to point out that CIT does, and this is I'm not taking anything away from Union Bank. They're great people, Smart Street, I should say, because they've been sold again to Pacific Western. So I want to say this. Most of these banks are the same. They're giving you the same back-end services. But there were two things that I was not happy with. There was the account number validation, what I just explained, where if you log in, you can only pay on your account. Some of you may recall, in the past, you could just type in anything in that box where it said account number. You could type in your street name. You could type in, 1, 2, 3, 4, 5. So when it came to us, Joanne and her team, they had to manually go through and fix a lot of these payments, and it slowed down our accounting process. We don't have that issue today with CIT. And the second thing is, for those going back to FDIC coverage, they offer a free surety bond if you have above $250K. So there was a lot of thought that went into that. And again, thank you guys for your patience.
I have a question too.
Yes.
How frequently is there a sweep of the lockbox for payments, and how long before the funds are sent to ACM?
So daily, they're processing every day. So this process on the screen happens every day. We get a file every day. and lock boxes. I tried to find a image of like what the old lockbox, like literally these big machines and people and standing around. A lot of this stuff, processes on the back end have now been automated. So it's helped the industry quite a bit. Thank you for that question. So the next part, so again, this is the receivable side. This is the money coming in. So the next slide we're going to talk about is how do we get money out? How do we pay your vendors? So Strongroom, which is a division of AVID Exchange. So we've been using AVID Exchange since 2016, where we decided we need to automate some of this payment processing. We probably process at least 3,000 payments a month out of ACM. And we really wanted to, and that's not including utilities and all those other things, but just vendor payments. We wanted to put in place a process that was going to, number one, speed up the payments to vendors, because obviously we hear your feedback and we don't want to damage any vendor relationships. Obviously, cash flow is important. Many of them are small businesses, so we want to we take that very seriously. So there's another daily process that happens, and sorry for the Zoom audience, but I do want to introduce for those in the room, Shanice Townsend. And you can just stand up, Shanice, just so that and say hi.
Hello.
Shanice is our accounts payable manager, and she has also an AP specialist, Tori Gibson, who works with her, and they are amazing. I mean, I have 2 people in payables for the whole company, and this stuff happens every day. So if you're a board member, you're signed up. And you would get an email from noreply@strongroomsolutions.com, and it would send you a link. If you have invoices, usually, I mean, it's probably pretty rare because we're only sending to you guys, unless we have a different request or different agreement, anything that is non-recurring. So all your recurring contracts, your landscaping, your utilities, your insurance, we're not sending that to you. There's no point in doing that because you've already agreed to it. It's a standard contract. But anything that is not recurring in nature, that is special projects, that snow, that your attorney bills, we should be sending them to you above $2,500. We send to you through Strongroom, and it's a point and click. If you can go to, so you would click the link on the invoice number, and it's really just as simple as clicking approve, reject. It'll catch up with this. But it shows you the image of the invoice, and it'll show you the details. So please pay attention to the account details as well. And our staff, they've looked at this before it comes to you, and they've coded it and allocated it to your budget line item. And basically at the top, you can select whether you approve or reject. My screen probably has a few more options there, but basically we want to make it simple for you versus paper going back and forth and emails flying back and forth. So I ask that you would save this email to your contacts, just in case. Save it into your contacts so you get it. Yes, Sumesh.
So, just so that I understand you correctly, so as board members, we'll receive an email
Yes.
indicating that there are invoices to approve.
Yes.
And then the next thing is, on this, when we go into the system to review the invoices, do you have the ability, because one of the issues that we've had in our community is consistency in service quality. So one of the things that I requested was that for any service provider to be reimbursed for the services that they've rendered,
Yes.
they have to provide before and after pictures.
Photos.
And so can those be
They can.
photos be attached to the respective invoices, so when
Absolutely.
we go in, we can see?
Now, it would have to be manually added by the manager, and what I didn't talk about is the fact that the vendor can submit directly to Strongroom. So one of the other things we've tried to do is, again, with having managers overwhelmed with all this paper hitting their desk. However, the manager, yes, can go back and add the photos in at your request. Your manager first is your liaison, but again, these are not going to be routine. You're not going to be getting something every week. These are really the non-routine invoices that will be coming to you. But if you know you had a project, for example, now for basic services, and let me just say this, it will be different because we're not your approver. So basically, the board is like the management, right? So you're going to be approving. Now, if we have your standard contracts on file, then we can release it. But for full service, most of your invoices that are coming through your manager has the ability to approve. But if you know you've done special projects, then you should be expecting invoices, yes.
Who gets the emails? Is it like the
It
president?
depends on,
or-
yeah, we usually ask for who want, but I think our default is president and treasurer, generally, yes. Yeah. But you can designate, yeah.
So is this replacing DocuSign?
No, it is not. So we still use DocuSign for reserve actions, major things where we have additional forms. You may get DocuSign for like audit-related documents, contracts, and I hope that everyone has, that was another investment we made because, again, we want to streamline. And luckily, we had a lot of these things in place before the pandemic, so we were able to pivot pretty easily. So I hope that, yes, we will still keep DocuSign. But not for routine, day-to-day invoices, it should be going through Strongroom. Okay. Any more questions about the payables?
I got a question then. So if we don't get the emails and you don't get approved, do you guys still pay them?
Well, no, it would be in your report, in your financial.
I don't think we've ever received any of these emails.
Well, let me speak to you separately,
Okay.
and we can talk about whether you have someone registered, enrolled in this, and if they're going, it may be going into a spam box, or it just may be that we have your contracts on file and we don't need, again, this is, as a board member, you're not gonna be getting emails from us regularly, because most of the payments are gonna be standard routine payments. So, yeah, we can definitely speak about that.
I don't think the program manager is responsible for sending us this, does it?
I'm sorry, say again?
The program manager is responsible for sending us the invoices, right?
No, they're not, actually. The vendor is. We give the vendor has the responsibility to submit their invoice. Now, we monitor, so if we're looking at your financials, and we'll get there, I want to keep track of time, because I really don't want to keep you guys past 1 on a Saturday. But when we look at your financials and we're checking your variances, then yes, we would point out if there is missing invoices. But it is the vendor, the service provider's responsibility to bill. But I'm going to keep it moving because it is 12:56. I didn't realize that we'd spent that much time on that. So just really quickly, you guys all have a financial statement in your packet. I can't emphasize enough the importance of reviewing your financials. We do have accounting analysts here. That was one of the roles that I created when I started at ACM because I value expertise. And one of the things that I didn't like about the industry is managers are expected to know everything. No one can be good at everything. You know, we wanted to attract, you know, people. We have dynamic managers, but we can't expect them to be contract specialists, insurance advisors, accountants. Like, it's just attorneys. It's just not possible. So one of the roles that I created here was the accounting analyst role, and that was to assign an accountant to specifically prepare and monitor your association financials. And we have 4 plus our head of the accounting department. And so, you know, the most basic is your balance sheet, obviously. You can go to the next slide. So basically, this is just showing the flow. I talked about assessments, collection side, and payables. Now we're going to talk a little bit about balance sheet and budget comparison. And again, most of these topics are standalone training. So bear with it. We're trying to fill in as much as we can just so that you know the important things to come back to. I think this slide hopefully will help. So your monthly balance sheet, which is the first page, that really shows you your cash position, your operating and reserve accounts, any investments you have, and loans. The monthly income statement or budget comparison, which is the one with all the details, that basically is going to show you if you're in line with your budget, with your adopted annual budget, and then identify any overages or adjustments. One thing I do want to say about the balance sheet, don't get confused about equity. Equity is not extra cash. So in this industry, we report on a fund basis. So there are 2 funds, operating, replacement reserve. Never commingle the 2. In fact, if I see a lot of borrowing between accounts, that's a red flag for me. So that if you're borrowing from your reserve to cover your operating, that's telling me budget's not in line, money, cash management needs an improvement, or there's just extra spending that we really need to rein in. And we're required to report anytime that you're borrowing between the 2 funds as a loan. And the other time that triggers a loan, and you'll see it in your audit, is if you're not funding your reserves in accordance with your your adopted budget. That can trigger an entry which would show as due from the reserve. And we provide an income statement that has essentially 7 columns. So if you look at it, the far right is just your annual budget. That's going to be your total. And then the first 3 columns, it's sort of like 2 different reports in one. If you focus on the first 3 columns, that's just, I want to look at this month. Okay, so I'm looking at March specifically. And if you look at the second 3 columns, then I'm looking at 2022 as a year. So you can basically block out. If you just want to focus on how do we do in the month of March, look at the first 3 columns. We ask our managers to report on any significant material variances, I would say 5 to 10% over budget. I'm not gonna say a dollar amount because materiality is just based on the size of your community and the size of your budget. But we ask them to report any really large and insignificant variances in your management report. We present administrative category of expenses, so that's your management fee, that's your tax and audit, insurance, office related expenses, bank charges, and then the second category would be operating expenses. This sample that I chose doesn't have utilities, so this community must not have any public lighting or anything, but generally you're going to also see a category for utilities. And then your reserve transfer, which isn't actually an expense. Your reserve transfer is an allocation to your reserve fund. So you really want to pay attention to the large categories and where you are. I always tell my staff, look at all of the contracted items, look at the insurance, look at your utilities, look at income. If you don't, those are the major things to pay attention to. And in a later slide, and I'm probably going to gloss over, but there's two different types of expenses. You've got your mandatory and then your discretionary. So obviously, if you've got a cash shortage, look at those discretionary things like landscape enhancements. We may need to cut back on that a little. If we're facing additional maintenance items or additional contractor items that we must pay or some unforeseen legal, there's always going to be those kind of discretionary. I'm not big on contingencies because I feel like that's like a slush fund. But anything that is sort of, we can spend $1,000, but we don't have to spend $1,000. So pay attention to those things. Yes, sir.
Can we get this in a spreadsheet?
You can get your financials, yes.
Just
in a
ask for
spreadsheet.
telling our manager to
Yes, we
send it out.
can download it, yes, as a spreadsheet, absolutely. Just contact your analyst or your manager for that. I'm sorry, I'm gonna actually ask the code questions. I'm so sorry, because I do wanna get to the meat and potatoes. And for those who have to leave, I understand, but I really do wanna get to a couple more slides, which is about tax and audit compliance, and then I'm gonna wrap up. But the next page is just your period summary that shows all of your 12 months of operating and revenues and expenses. We always provide a general ledger, which is all the details. So for every account that's in your report, the detail is there to support that. We provide a list of bank accounts. We had to reinstate that. It was missing for a while, but it's back. So it used to be called the investment maturity. It's the same thing. So if you have investments, this report's going to show. And we actually are working to automate the notification of CD, and I will get to your question, of CD maturity. So you'll get an automatic alert of that. And then paid invoices, basically you're going to get a listing that correlates to Strongroom and what's been paid in that report. And one thing that I'm not sure, I was just talking to someone about a CAI seminar we're working on, a lot of management companies don't provide, is the reserve statement. So any activity, because if you're only looking at your budget report, that's not showing you the whole picture. You also want to know what's happening in your reserves. So we provide a reserve statement that would capture any contributions, interest, and disbursements from your reserve account. And then obviously we also provide in our reports copies of all bills. Again, I'm going to piggyback on the word we've used throughout this session is transparency. Paid bills, your bank reconciliations, copies of your bank statements. Those should always be in your financial reports. So that's yes. I don't want to discard your question.
So I just want to know, so these are all on cash basis, right? Not accrual basis?
Accrual at request. So yes, that is a whole topic, but yes, cash basis is we report income as we receive it and we report expenses as we pay it. That is, most board members prefer that. We do have some that want accrual, which we can do. We are licensed and degreed accountants here. That is basically recognizing income as it's billed and expenses as it's incurred. So whether you've paid it or not, it's still going to show up as an expense. Whether you received it or not, it's still going to show up as income. Some don't like that. We do still provide open AP and open AR reports. So if you have a lot of aging, we're obviously going to report that. It's just not showing your balance sheet. And the same on the payable side, we do report open AP. It's just not on your balance sheet. So it provides a little cleaner of a financial. I see some confused looks, but anyone who wants to follow up with me after this about anything, feel free to do so. I I just want to make sure I don't forget too to recognize, most of you got this invite today from Theresa Mobley. Theresa, I haven't had a chance to, Tim, can you pan the camera to her for a moment? I have to recognize Theresa Mobley. I would be remiss. She's the only staff member, and I have Ron in the back. But Theresa is, I don't even like saying my executive assistant, because, I'm a person, I do a lot on my own. I've never even thought I needed an assistant. But when I tell you Theresa has just been my right arm, and she made sure that all of this flowed seamlessly today, logistically. Thank you, Theresa. I did not want to forget to recognize her. There's always those who work hard in the background. Thank you, Tim. So, replacement reserves, I'm not going to spend a lot of time. You guys know the importance. Craig talked about reserves, and someone asked about cash flow versus component method. It's there. Cash flow, basically, in a nutshell, just lumps everything together. It assigns a useful life, and it divides it by the number of years of when those items are expected to expire, essentially. And you have one pot. Component method breaks it down. So it says you can't commingle. You're going to have sub-funds within your reserves. And usually cash method is the most conservative. I'm not going to give you advice on that. I'm just going to say your engineer will give you your options on that. They'll tell you these are your options. Usually we do go with cash, the cash method. All right. The other thing is the CPA prepared audits. If it's not prepared by a certified public accountant, it's not an audit. That is just generally accepted accounting principles. It needs to be by an independent person, not someone of influence. So for example, although I'm a CPA, I can't provide your audit because I'm not independent of you. I can't manage you and be independent at the same time. So you want someone that is not associated with the management company. We do have CPAs that have worked with us for a long time, but at any time if you say, I want to use this independent company, and they are independent, but if you say, I'm not too sure, I want to continue using them, just as your attorney, we have the responsibility to bid that for you as well. So from your CPA, you're going to get an engagement letter, that's the annual contract that you receive. You're going to receive, and then once you sign that contract, that gives us the authorization to proceed with the procedures that we have to go through to give them all the reports, to answer their questions. They test your revenues, they test expenses, material items. They're not looking at individual budget line items. They're not looking at even probably a $500 overage. That's not their job. They're testing to see that those items are fairly represented, that there's not transactions that are missing. They don't even really check authorizations. There are special, requested specific scope audits you can request, but generally speaking, they're looking to see that is the financial report that ACM provided to us, does it fairly represent the financial position of the community? That's their job, and to form an opinion. But they make no warranties or representations. That's why you guys have to sign that representation letter every year, and as do I, to say we haven't misled, we haven't left off any litigation, any fraud, anything to our knowledge hasn't been left out. So that's what that representation letter covers. It's just that, it covers the CPA, essentially, to say, look, we audited what you gave us. And the CPA is going to convert, to get back to that accrual question, they're going to convert your cash basis financials to accrual. So they will do that. And so when you get your audit, the numbers will look different. In some cases, it's not very much different. They're going to look at, okay, the year ended in December. They're going to look at January. They're going to say, okay, they paid these bills in January. Were those incurred in 2021? Okay, we need to accrue them back and include them in this accrual basis audit. So they're looking at that. They test a lot of things. They also look at, like I said, our internal controls. They talk to our staff. Sometimes the managers, if there's insurance claims, they want to see documentation. Any large purchases, they look at the reserve study. They do check that as well. And it would be in the notes within your audit. And then the opinion letter. I mean, that's basically what wraps it all up. They issue an opinion. Are these, if it's basically you don't want a qualified opinion. A qualified opinion means something's wrong here in your financials. You don't want a qualified opinion. I don't think we've ever had a qualified opinion, which I try never to have. If a scope limitation simply means we don't have all the documentation. I've never encountered that here unless it was a transition from a prior management company. Because remember, We don't keep paper. All of our stuff's electronic. Our auditors have full access to everything you guys have access to in terms of financial information, Strongroom, financial reports. So we've never had a scope limitation in that sense where we couldn't provide the documentation. Any questions about that? All right. I know it's getting a little dry, audits, you got legal, insurance, audits all on a Saturday morning. Go to the next slide. Let's see. Taxes. I'm going to be brief on taxes. I know there's some questions about exemption status. I do want to talk a little bit about that. So under the IRS code 528, it gives us community associations the ability to claim exemption without going through the whole 501c process of submitting the 1023. I know those numbers are probably not familiar to a lot of people. There's two different ways you can get exemption. Before, I think it was 1978, there was no section 528 that granted automatic exemption to homeowners associations and condos. I mean, it covers condos too. They just call it umbrella HOA. But after 1978, there was this IRS code 528 that said all you have to do is file this form, which is 1120H, and I have a sample in your packet. That form gets you tax exemption. However, it does look at whether the income and expenses are called functional or non-functional. So generally, all of your assessments, fines, anything that you can collect under your governing documents, those would be tax exempt. Investment interest is not. So sometimes if you see that you owe taxes, it could be that it's just a little bit of taxes on your investment earnings. But there is a test that you have to meet. It's the 60% test on income. So if you have other sources of income that's not assessments, it can exceed 60% or you're not going to be tax exempt. It throws it all out. On the expense side, it has to meet a 90% test. So if you're going out and spending something that's not related to your community, maintaining, repairing, acquiring property, it has to be related. And it's a very specific definition. Basically, acquisition, construction, management, maintenance, and care. If it doesn't fall in that category, then it's not going to meet that 90% test. But you have to be spending a lot of extra money to exceed 10% of your budget. So this isn't something that I've ever seen. I'm sure it happens in some large-scale communities where they may have other, recreational activities or other types of activities that wouldn't be related to the care of community property. But we've never had a community in our portfolio that didn't meet that. But that is something that the tax preparer has to look at. So the other way that you can request exemption. So I had this question about the 501 statute. So there's 501c4 and then there's 501c7. Again, most communities do not apply for this. 501c4 is for social organizations and 501c7 is for recreational and social. But the IRS is looking for a public benefit. So if you're that, you can't restrict it to just your membership. So I've had maybe in 12, 13 years, 2 communities ask me, is it beneficial for us to apply for this? And I said, really, no, because you're automatically exempt as an HOA just by filing 1120H. I mean, it gives you that automatic exemption. Now, I will say this. If you have taxable income, your CPA may decide to treat you as a corporation instead of, and I know this gets really in the minutia, the corporate tax rate is lower than the tax rate on the 1120H. So the 1120H, last time I checked, it was 32%. The tax rate on corporate tax is 21%. So if you're in a situation where you may have taxes, the CPA will run it in both scenarios and say, it makes more sense for us to file this just as a straight corporation. You're still usually not going to be subject to much because your expenses are still going to offset that revenue. For the most part, they are going to back out, if it's, again, those things that are not for acquisition, construction, management, maintenance, and care. They have to back that out. But we monitor your financials. If we see anything, trust me, if your manager or your analyst sees anything out of the norm, they're going to have to set up a new budget code. They're going to have to talk to the board and say, wait, what is this? Is this really for the purpose of maintaining your community? So that's something that, again, is pretty rare. I also had a conversation with Craig about this earlier. I'm not going to go into great detail, but it's something you guys should know. There was a revenue ruling called 70-604 by the IRS years ago that said that communities were required to vote if there was excess income to either deposit it to reserves or to give it back to owners. No one's going to recommend you refund your owners. Okay? In most cases, put it in your reserve. But if you're collecting or for some reason have a major savings and expenses, put it into your reserve fund. Be proactive and make a deposit to your reserves so that you're not taxed on the excess income. I had to mention that.
So you don't encourage carrying it over to the next year?
Well, yes, that basically is a carryover. You can carry it over, but you basically are saying, I'm not just leaving this money, and I'm not talking about the physical, like the FDIC limits, but it's a budget. So you have to look at your year-end budget to see if there's excess income, to see if there needs to be. Usually it's not material enough that we need to do anything. But yes, you need to be able to justify that it was carried over, used for reserve, to build your replacement reserves, because again, it's very rarely recommended that you give it back to your owners. There's usually a need.
Carrying it over is virtually giving it back because it lowers the next year's assessment, lowers the increase.
No, we don't recommend that either. We've never recommended that. I mean, essentially, you can use it as we recommend that you maintain 2 to 3 months of assessments in your operating account anyway. So you can utilize it for unforeseen, budget for it, and you'll be fine. So that's where that, I know I said I don't like contingencies. I wouldn't call it that. But basically budget for maintenance and increase your maintenance budget. Look at your budget to see where your typical overages are. We've never recommended a decrease in assessments. Usually it's going the other way.
No, not decrease in the assessment, decrease in the increase of the assessment.
Yeah, if it works out that way, yes. That's a possibility, yes, it is. And we also include in our budget something called uncollectible. And I know there may be some confusion on that. I look at, because we do cash basis of financials, if you're budgeting on 100% of your assessments and 10% of your owners aren't paying, you're building in a loss essentially. So why budget? So let's say your budget, just a round number, is $100K, and you're budgeting for $100K of expenses, you're going to have a shortfall if we don't put in an adjustment for that difference. So that's what that line item is. You'll see that, I think it's 4110-1 or something. That's what that is. It's basically to adjust for the anticipated delinquency rate. That's what that line is. So that we ensure you can still pay your budgeted expenses. Yes.
What type of aging collections reports do you offer?
We have a wide variety of collections reports. So I would reach out to Joanne or your analyst, or to me. I think I am your analyst. You can we can if you have something specific. Sometimes we can even redesign the report. We have a lot that's not in this packet. I mean, there's a multitude of formats, but obviously for consistency, we kind of choose the statements that are provided. I think that's it for me, actually.
I have a quick question.
What's the next? Oh,
Does investment interest include interest earned on reserves?
yes, it does. That is not tax exempt.
Next slide. Sorry.
It is taxable, isn't it, Chris?
Investment interest is taxable.
Yes.
Yes, not tax exempt. Yes,
Okay,
that's
because she
correct.
said not.
That's it. I talked about, this is just some budgeting tips for you. I won't go over that. We're probably going to be starting to send out information on budgeting in the next, probably 30 days, 30 to 60 days. We'll start working on budgets. And then lastly, I just want to talk about our scorecard for 2 seconds. Thank you guys, everyone who responded to the scorecard. We have a lot of great feedback, and we're always looking to continuously improve. We ask you questions on the call center, on the portal, maintenance, any service that you're getting. We want to know. We want to hear back on how we're following through on things, and we'll be sending it out to you quarterly. It doesn't mean you have to respond every quarter, but we are going to send it quarterly because we also use that to monitor our staff and to provide educational and training opportunities for them as well. And if you have any questions on the types of trainings you would like to see us offer, please feel free to let us know. We're so elated to be hopefully beyond this pandemic and able to get back into giving you great content and being here for you as a resource. We're always here. But there's something, one of the gentlemen said, there's something about the in-person that's just not the same. We love the Zoom meetings, by the way. Thank you for keeping our managers off the road, but, and keeping you in your homes. But sometimes there is value in coming together. So I really, really do thank you all for joining us. Just the last thing I want to reiterate was the community referral program. We do offer a management fee credit. If you know of a community that's looking for management, feel free to contact us and make a recommendation. And we thank you all for coming out on a Saturday. Thank you all. Thank you to the Zoom audience as well. We appreciate you tuning in. And we will be back to you on June 7th from 6 to 8 p.m. with a fantastic collection seminar. So please join us.